Following Donald Trump's re-election, the landscape for big tech is shifting dramatically, with both opportunities and challenges arising under his administration's approach to regulation, data privacy, trade, and more. The tech industry now faces a future shaped by policies that emphasize a hands-off approach in certain areas, while being stringent on others, particularly those involving free speech, trade with China, and antitrust issues. Here's how this new term is poised to affect the industry in profound ways. Content moderation and Section 230 reforms. Trump has long argued that tech companies unfairly censor conservative viewpoints, and his re-election has put Section 230 reform firmly back on the agenda. Section 230. Part of the Communications Decency Act, currently shields platforms like Facebook, Twitter, and YouTube from liability over user-generated content, allowing them to moderate posts as they see fit. Under Trump's administration, however, this shield is being re-evaluated. Without the protection of Section 230 in its current form, social media platforms might face higher accountability for what users post. This could lead to stricter content moderation policies or a reduction in censorship, depending on the new rules. Trump's administration seems keen on loosening platforms' ability to control speech, pushing them to allow a wider variety of opinions, even if controversial. If they don't comply, they risk facing lawsuits or regulatory action. This shift could drive significant changes across the social media landscape. Traditional platforms may adapt to avoid legal risks, while alternative networks, like Trump's Truth Social, might gain traction among those who feel their voices are stifled elsewhere. The ripple effects could push major tech companies to overhaul moderation practices, either increasing oversight to avoid legal issues or scaling back moderation to support free speech, data privacy, and user protections. Under Trump's re-election, data privacy policies are expected to take a business-friendly direction. While Europe's GDPR has set the global standard for data privacy, with strict requirements for user consent and data protection, Trump's administration leans toward lighter regulation. This approach favors tech companies, allowing them more freedom in data collection, tracking, and targeted advertising practices without the rigorous oversight present in European policies. This could mean that American tech companies enjoy a competitive edge on their home turf, where regulations are less burdensome. However, they still need to navigate international privacy standards to operate globally, which may create a patchwork of policies and compliance requirements depending on the market. While lighter data privacy regulation may allow for more innovation and ad revenue domestically, it could also make users wary of how their data is being used, especially as privacy concerns continue to grow. It remains to be seen if Trump's administration will take steps to reassure users, or if the responsibility will fall on individual companies to build trust with their user base. Trade and tech, the ongoing tension with China. Trump's firm stance on U.S.-China trade relations has always impacted the tech sector, and his re-election only cements this. His administration has reinitiated tariffs on Chinese goods, including tech components, and reinforced measures against Chinese tech giants like Huawei and TikTok. Trump argues that these companies pose national security risks, and his administration is likely to maintain or expand restrictions on their operations in the U.S. This tense relationship could put U.S.-based companies in a tight spot. Companies like Apple, which rely heavily on Chinese manufacturing and the Chinese consumer market, may face supply chain issues and higher costs if tariffs continue. As a result, they might look to shift parts of their production out of China, potentially increasing expenses and impacting product prices for consumers. American companies operating within China or relying on Chinese markets may also face backlash, with Chinese consumers turning to domestic alternatives. Conversely, Trump's policies could encourage a revival of U.S. manufacturing or incentivize partnerships with countries outside China, diversifying global supply chains over time. Antitrust actions and market competition. Trump's administration has expressed skepticism over the power of tech giants like Google, Facebook, and Amazon, and antitrust scrutiny is now ramping up. Although his approach may not be as aggressive as that of other administrations, Trump's re-election has ushered in a targeted focus on monopolistic practices, particularly where these companies may influence politics or economics at a national scale. These tech giants are facing increased pressure to demonstrate that their dominance doesn't stifle competition, or innovation. Potential antitrust actions could mean that mergers and acquisitions are more closely scrutinized, or even that certain market practices are limited, affecting tech companies' growth strategies. For instance, Google's dominance in search and digital advertising could come under tighter regulation, with new policies enforcing fair competition. These antitrust efforts signal that, while Trump may be business-friendly, he's wary of letting any single company gain too much influence. Smaller tech companies could benefit from such measures, potentially creating a more competitive landscape if the giants are reined in. Immigration policies and the tech talent pipeline. Trump's approach to immigration has had a substantial impact on Silicon Valley and the broader tech industry, which heavily relies on international talent. With his re-election, the administration is continuing its conservative immigration policies, which could affect the H-1B visa program and skilled worker migration into the U.S. This visa program is crucial for tech, as it allows companies to recruit highly skilled foreign professionals, especially in areas like engineering and software development. Any restrictions or changes to the H-1B visa system could impact the workforce pipeline for American tech firms, potentially leading to a talent gap. Companies may have to look at expanding operations overseas to access the talent they need, or invest more in domestic training and education to fill these roles. This shift may not only affect the talent pool, but also alter the dynamics of the U.S. as a global tech hub, as international talent may seek opportunities in countries with more open immigration policies like Canada. The administration's immigration stance may push the industry to reevaluate its workforce strategies to adapt to changing rules. Cybersecurity and national defense. Cybersecurity is becoming an increasingly important priority, especially with the rising threat of foreign cyber attacks. Trump's administration is taking an assertive stance, focusing on protecting American interests and infrastructure. The tech industry is likely to experience pressure to collaborate closely with the government on national security measures, including data sharing and enhancing cyber defenses. This means tech companies could be more heavily involved in national security, from developing stronger defenses to managing critical infrastructure protections. Trump's administration may also impose stricter requirements on data security standards, pushing companies to invest in their cybersecurity measures. This emphasis on cybersecurity aligns with his administration's focus on maintaining a competitive and secure position in the global tech arena, tax policies, and corporate finance. Trump's administration is likely to continue implementing tax cuts for corporations, benefiting big tech firms in terms of profitability and investment capacity. Lower corporate taxes allow these companies to reinvest in their operations, fund research and development, and potentially provide returns to shareholders. However, any shifts in tax policies around offshore tax havens may also affect how these companies manage their finances globally. A more favorable tax policy could incentivize companies to reinvest domestically, potentially fueling innovation, hiring, and development within the U.S. However, with an eye on fiscal responsibility, the administration may look to close loopholes that allow tax avoidance, especially for companies storing profits offshore. This could affect the financial strategies of large tech firms, but ultimately boost the U.S. economy if these policies encourage more domestic investment. Corporate culture and political polarization. Trump's re-election has reignited the conversation around corporate social responsibility, CSR, and political alignment within big tech companies. Many tech firms have adopted progressive stances on social and political issues, often clashing with Trump's policies. This dynamic may lead to further polarization between tech companies and the government, especially on topics like content moderation, data privacy, and immigration. Tech companies are likely to face pressure from employees and consumers alike to take stands on political issues, which could increase the tension with Trump's administration. This dynamic may lead to some companies openly opposing policies or working to influence legislation, creating a politically charged atmosphere within the tech sector. How tech firms balance these responsibilities will shape not only their public perception, but also their relationship with the administration. Conclusion: navigating a new era for big tech. Under Trump's re-election, big tech is entering a new era marked by both regulatory tightening in areas like content moderation and trade, as well as potential tax incentives. The industry will need to adapt to a landscape where free speech, Data privacy, global trade, and immigration policies are all evolving under the administration's policies. With new challenges in balancing national security, employee expectations, and global competitiveness, tech companies are likely to navigate a complex environment in the coming years. Trump's stance is clear. While he is business-friendly, he prioritizes national interests, cybersecurity, and a free market approach that still holds tech giants accountable. The industry's adaptability and response to these policies will shape the next phase of growth and innovation, solidifying the role of big tech in the American economy and beyond. The future will reveal how these companies balance their global ambitions with the realities of a more regulated, security-focused, and politically charged environment in the U.S.